So the sky is falling down on China, and here's the narrative. Evergrande has imploded, country garden is in crisis, and China's economy is heading to economic hell. Now, on the surface, this seems kind of plausible, and all the dots seem to connect. Plus, Evergrande filing bankruptcy in the United States pours fuel to the fire that China's real estate market is doomed. But we need to investigate further, and we quickly realize that China might actually want their real estate sector to fall back to earth. And in our lead story today, China's property giant Evergrande files for bankruptcy protection in Manhattan court, and the losses suffered were horrible. Evergrande posted a combined loss of $81 billion over the past 2 years. And whenever you have a company filing for bankruptcy, you know they're at their wits' end. Evergrande is trying to protect their assets while attempting a restructuring plan. So this Chapter 15 filing is the delay tactic to get their affairs in order. And this is where the horror story starts to build, where Evergrande default on their bond payments, and where investors just get left on the hook because it isn't just Chinese buyers that were affected. Global investors were also piling on a bunch of Evergrande bonds. We have over 28 billion of outstanding bonds that Evergrande is desperately trying to restructure. And guess who were the big buyers of the bonds? It was Wall Street. BlackRock was a buyer. Big banks like HSBC and UBS were buyers. And this is where the contagion fear builds. If Evergrande defaults, how much damage will these companies take? And you might be wondering, why did they even buy Evergrande bonds in the beginning? Well, because the yields were insanely good, especially back in 2021 before all the default stories came to roost. Now, back in their 5-year bond that matured in March 2022, yields were well above 10% before they started to default in late 2021. It got so risky that yields went above 500% when Evergrande missed payments. Their bond essentially became a lottery ticket. Now, if the company could make the payment, you get 5 times the return. However, there's now a wall of debt coming for Evergrande in 2025. We are talking about $28 billion coming due, while their liabilities are over $300 billion. A complete bond default is possible. But we shouldn't expect the Chinese government to bail them out. This isn't going to be a Wall Street story, and we gotta understand why. So Evergrande is simply a story of dangerous borrowing to capture market share. The developers essentially knew that there was always going to be a demand for Chinese real estate. It's not just a place to live in. Buying a house is a status symbol. If you want to find a partner and get married, you need to buy real estate. There's even a survey that confirms this. Over 80% of female respondents feel that owning a property is a crucial requirement for marriage, and it's all about security and the concept of saving face. And Evergrande knows this. They know there's always going to be buyers for real estate because it's so baked into the culture. So they went out and they borrowed a ton of money to build a ton of homes. They borrowed from Chinese banks, they took loans from international hedge funds. They basically borrowed from everyone to keep growing. But now things have changed. In 2020, China implemented their 3 rate lines, which are basically borrowing caps to prevent developers from going crazy. And it's all about containing the amount of debt and ensuring the company stays solvent. So if you're a developer and you cross all 3 rate lines, you can't borrow any more money. And for Evergrande's case, that turned out to be fatal. Evergrande kept borrowing money from Peter to pay Paul. Their model was to keep rolling the money forever, jumping from one credit card to another. But once China came out with the 3 rate lines policy, their fate was sealed. And we can see clearly how wild Evergrande's borrowing became. Back in 2021, they crossed all 3 rate lines. They were simply borrowing too much, and it was just a matter of time before everything came crashing down. That's why we are seeing Evergrande filing for bankruptcy. They are trying to buy time to restructure without any interference. Evergrande is trying to limit the risk of contagion, which is a good thing. And as part of a restructuring deal, creditors would either get new long-term bonds or a mix of shorter-term bonds and equity-linked instruments. It's basically kicking the can down the road. And if this goes through, Evergrande will resume operations and start building homes once again. And that's why a bailout from the Chinese government isn't really needed. The private sector itself can iron out a deal to prevent a collapse without any stimulus. Injecting money to Evergrande now would set a bad precedent and re-zombify the entire industry once again. They might as well just throw their 3 rate line policy into the dustbin. But let's talk about the contagion effect. Will this move collapse the global economy? And will this be a repeat of the 2008 banking crisis? And there's a lot of doom and gloom being painted, especially with the country garden crisis. According to JP Morgan, there are serious fears of REITs defaulting. Now, if investors are unwilling to roll over their products, investment trusts will have to use their profits to honor the debt payment. And in a worst case scenario, rising defaults would drag China's GDP growth down by up to 0.4%, which is quite significant. And remember what Wall Street expects China to do. They expect China to post a 5% GDP growth in 2023, or else it will be a global tragedy and China is somehow collapsing. Now, on one hand, there is some cause for concern. 30% of China's GDP comes from the real estate sector. So, if home prices collapse, if bond payments default, we would see less buying and fewer investors. It just makes total sense. But just how exposed is the global economy? Will Country Garden default cause Wall Street to implode like Lehman Brothers? Now, in a story from Bloomberg, there are many funds and banks all holding exposure to Country Garden bonds. And the big fear is a collapse of global creditors if Country Garden defaults on their bond payments. But if we dig deeper into their holdings, you'll realize it's not that serious. The three biggest holders are BlackRock, HSBC, and Alliance. They all hold over $300 million worth of Country Garden bonds each. And that sounds like a boatload of exposure, but it really isn't catastrophic. BlackRock had almost $8.5 trillion of assets under management last year, so their Country Garden exposure is well under 5%. So I don't expect any companies on this list to collapse anytime soon. And to be real, there will be investors left out in the cold. Bonds default all the time and it's all about risk to reward. If you go for higher yield, you must be ready for potential default for double or even triple the return. Now the global economy isn't going to crumble. The real risk is a global slowdown that will start with China consuming less, and that is the more likely scenario. So let's talk about the real risk to China. Will China's economy collapse into ruin because of Evergrande and Country Garden? And according to JP Morgan, they expect China's residential sales value to drop by 10% this year. And that means property prices are going to drop by up to 10%, which is a significant decrease. Then we have overall investment in real estate development falling by 8.5% in the first 7 months of this year. So things are obviously bad, and China's real estate market is contracting without a doubt. And here's the big fear. A survey found that 70% of household wealth is tied up in real estate. So you have a bunch of paper millionaires walking around, and if their net worth takes a hit, it will be a big mental blow. And just think about it, right? If you're a millionaire and suddenly you take a 10 or 20% hit on paper, suddenly you're no longer a millionaire. Then you'll start spending less and you become Scrooge McDuck. And that's why we are seeing prices in China come down and the economy dipping to deflation. Now, if China consumes less, the global economy will suffer. America will suffer and Europe will be in pain because they export a ton of stuff to Beijing. But let's look on the flip side, because home prices coming down can also be a good thing, not for the speculators, but for the common Chinese citizen. Now, China is a country of homeowners with over 90% of households owning their own property, but there are 20% that own multiple homes, and that increases the housing divide and jacks up the cost of buying real estate. Listen to this tragic story from a teacher looking to buy an apartment in Shenzhen, one of China's most expensive cities around. Although prices came down about 10% after the recent market crash, her salary has been cut by 9% as well. She needs to save for a few more decades to afford her own place. So there is a big problem because China's end goal is common prosperity. President Xi has said many times that homes were for living in and not really for speculation. Property prices needs to come down or else you'll crush the spirits of the vast majority. But the recent crash hasn't really moved prices much. Home prices has been falling for many months now, and this decrease isn't going to end yet. And this is a good thing for the overall economy because it'll be more affordable for people. This could be a controlled implosion of real estate prices by the Chinese government themselves, so we shouldn't expect any stimulus coming. And I think the expectation of Wall Street for China pumping money isn't going to happen. I take this piece from Reuters. Another day, another disappointment from China. They only trimmed their 1-year benchmark lending rate by 10 basis points and left the 5-year rate unchanged. Now the West is still banking on a China recovery fueled by stimulus, but they're going to be very disappointed. China is running their economy cold on purpose, and we are seeing two very different approaches today. America's strategy is to borrow tons of money to goose up the economy, while China is trying to crush the speculation and all that addiction to debt, which to be honest does come with some risk. If China doesn't want to cushion the blow and they want to move away from a debt-ridden economy, we have to expect growth in China to drop. The estimates show that China's GDP is starting to decline as a share of US economic growth. It has dropped from nearly 80% down towards 65%. In other words, America is growing faster than China over the past 12 months, so the Chinese economy overtaking the United States will be delayed because of the real estate popping. But I want us to take a closer look at the numbers because it doesn't really tell the full story. You quickly realize that even though China's growth is dropping below America, they are actually enjoying faster real growth. And check this out, that 6.5 nominal growth in US GDP in 2023 is distorted by the high inflation. China's 4.8% nominal growth is similarly affected by its deflation. And if we look at the inflation levels between the US and China, it gets really clear what is propping up US GDP. It is not really organic growth in America, but higher prices they are boosting the number. In China, it is the exact opposite. In spite of a 0.3% deflation, their economy is still growing, which actually shows resilience. They are expanding faster in real terms, so there shouldn't be any confusion here. China is trying to reduce reliance on their property sector, and this deflation is a direct consequence of the bubble popping. Real estate contributes too much to the Chinese economy, and they have to reduce reliance. Now, if President Xi, if he injects money to Evergrande or Country Garden, this saga will continue for years and decades to come. Then China will really implode from within. So here's what's happening. China is shifting towards a new economy. They are trying to grow their tech sector. Industries like high-tech microchips are growing fast but account for only 17% of GDP. And that's lower than real estate, and that is a big problem for the Chinese government. There is zero motivation for them to prop up the real estate market. If they want to rebalance the economy, they must let it fail to some extent. So instead of pumping more money into the system and letting their debt run wild, China is actually shrinking their deficit. In a report by Bloomberg, the budget deficit was only $450 billion, down by 37% in the same period last year. They are telling the world that we are not going to stimulate. In fact, we are repairing our own economy. And we can see how China is repairing their budget, trying to rein in spending. Over the past 2 years, they have spent too much, and now in 2023, they are trying to force the budget balance back into positive territory. So it's very dangerous to assume that China will save the world. And as investors, what does this mean? Globally, consumption will continue to head down because China will be buying less. A global recession is now virtually unavoidable. We could also see further damage done to Chinese stocks in the short term. But here's the good news. China's subsequent growth will be more organic and on a stronger foundation. President Xi, he is trading short-term pain for long-term success. But let me know what you think. Will China survive the Evergrande implosion, or will they be forced to stimulate? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.